from? Where do you live?
Actually live here,
Okay.
just up the
All
road.
set?
Yeah. Perfect.
Okay, good afternoon, everyone. My name is Colin Finnerty. I'm the co-head of Blockchain Investment Banking Group here at Clear Street. And welcome to this session, which will be focused on digital asset treasuries. We'll try to double click a bit more on the strategy, capital efficiency, and risk components of the business model. I'm thrilled to be joined by some of the influential thought leaders in the space, leaders of 4 of the most preeminent DAT and digital asset treasury focused companies. First, we have Jamie as the CEO of Reserve One. Reserve One is currently going through a $1 billion de-SPAC transaction. They will be focused on taking a diversified approach to the treasury model, owning several assets on the balance sheet rather than just one. Prior to this, Jamie was the CEO of Hut 8, one of the largest Bitcoin mining firms globally. Next, we have McAndrew Rudisil, CEO and chairman of ETHZilla. ETHZilla is a publicly traded company focused on the acceleration of the Ethereum ecosystem through treasury and other strategic initiatives. Prior to ETHZilla, Mac was a managing partner at Harbor Island, a leading digital asset investment firm. Next, we have Jeff Park, currently CIO of ProCap BTC, also going through a $1 billion de-SPAC transaction. Currently, the company will be focused or is focused on a Bitcoin treasury and other strategic initiatives. And last but not least, Joseph Chi. He is the executive chairman of the Solana company, which is a publicly traded company focused on the acceleration and accumulation of the Solana ecosystem. He is a co-founder of Summer Capital, which is one of the co-sponsors to the company alongside Pantera Capital as well. He was also a leader or led the investment bank for UBS in Asia for quite some time prior. So to dig into it, I think at the highest level, we've seen a proliferation of DATs in 2025, right? I think DAT 1.0, the strategy was really get public and then accumulate digital assets as soon as possible. I think at this point, we're starting to see the competition increase, and it really is how do you differentiate and win. So now we're kind of entering this DAT 2.0 phase. And so maybe to kick this off, Jamie, given the proliferation of DATs, at a high level, how do you differentiate?
Yeah, I mean, we took a very intentional approach with how we structured Reserve One. So we're obviously coming to market at scale. We are the only scaled diversified digital asset treasury company, so expected to be 80% Bitcoin and then 20% in an alt sleeve that's really inspired by what we're seeing the federal government do with the digital asset stockpile. So initially expecting Ethereum, Solana, ADA, XRP. We're also active, so actively putting the assets to work, generating returns from those assets. And then in addition, we've structurally incorporated the ability to allocate up to 10% of our AUM into high conviction venture opportunities. So really, we've constructed the company to give investors exposure to the upgrade of the financial system. And we're really excited about what we've pulled together. Really diversified management team and board of directors, a good cross-section of Wall Street, crypto, Washington, which we think is gonna differentiate us as well as we launch early in the new year, hopefully.
Got it. Yeah, clearly a differentiated approach with the basket call it approach versus the single asset. You have Solana, Bitcoin, and ETH going down the row. I think as we think about the single asset companies, there's competition around how to differentiate, whether it's from a yield generation perspective, or productivity of the balance sheet, even cash flow operating businesses next to the treasuries. Maybe Mac, for you, how do you think about kind of cash flow generation and potentially yield generation strategies beyond just generic staking, et cetera?
Yeah, thanks, Colin. I think we come at this from a slightly different perspective than most of the other digital asset treasury companies. All the executives involved in our company are entrepreneurs. We've built and sold multiple large, multi-$100 million businesses. All of us have private equity background. And our focus on this is actually completely on bringing real world assets on chain. We spent the last couple of years working on the technology infrastructure to program these tokens. We've been working on the legal infrastructure. And we came to the conclusion before doing the transaction this summer that Ethereum was the right place to do this and to do it on customized L2s on our own exchange. And so for us, owning Ethereum is like having oil we need to have some Ethereum on the balance sheet to invest in various L2 protocols that generate yield for us today, but where the real cash flow is going to come from, and which you're going to see in the next couple of weeks here in December, is physical assets that generate cash flow that we are going to tokenize using Ethereum, that are going to become Ethereum collateral associated with our L2 protocols that are already invested in ETH. And it's going to create a global marketplace for tokenized real-world assets. And to give you an example, structured credit is a multi-billion-dollar asset class that we're focused on. Consumer receivables, physical assets, aerospace assets, that's my background. All these things are going to be brought on chain, and I think we're going to be the center of this marketplace. And we're going to do that through liquidity.io, which we just bought a large stake in. We have a digital ATS exchange, transfer agent, custody agent, broker-dealer. We basically have the full breadth of opportunity available to us to bring anything you want and fractionalize it on chain, and it disintermediates the securitization marketplace. So we look at Ethereum as an asset that's necessary to hold, but it's really just a part of our business, and the bigger, larger part of our cash flow and revenue in the future is going to come from everything that we're tokenizing.
Clearly at the nexus of a lot of topical themes in the market. I think the tokenization of real-world assets is something that is, just almost pervasive across the market. Everyone's trying to figure it out, but interesting to put that business model into, what is a digital asset treasury, at least to start. Maybe on a, going from Ethereum to Bitcoin, right? Not a proof of stake. It's a little bit different from a yield generation perspective. How do you guys think about just yield generation or making your balance sheet as productive as possible with Bitcoin as the core asset?
Yeah, sure. Colin, thank you for having us, and excited to be here today. Look, it's funny, when Strategy came online and preached its narrative to the flywheel that it's building, a lot of people didn't know what to call the entire phenomenon, right? Some people call it Bitcoin access vehicles, and otherwise conduit, and now we have this term digital asset treasury. And so, when you really look at the definition of what a treasury is, right, there's two functions treasuries would serve, based on what Merriam-Webster would say. One, it's a store where you put your treasures, right? It's a place you actually put your valuable things at a store of wealth. And then the second thing is, it's actually like a government entity that actually is in the business of collection and redistribution of income for a sovereign. And so in that frame, like, the mission for us is pretty much deciding on those two factors. One, what is the ideal store of asset in which we do believe it's the treasure that you want to hold for? And for us, it's pretty clear, it's Bitcoin. I think it's Bitcoin because Bitcoin is exclusively a crypto asset that is able to leverage on some unique properties that institutional investors can appreciate. And those two things are, one, it's volatile, and two, it's collateral. And I think it's very challenging otherwise to think of other crypto assets that can marry those two constructs in the way institutional investors have found appetite for. And then the second thing is, as you mentioned, yield, right? Like, the second definition of a treasury is you actually have to do something with those underlying receipts for distribution. And so I think at times Bitcoin gets a little bit cornered because its very value proposition itself is to be not productive, right? It's this thing that just stores wealth and exists under your mattress, kind of like gold, and is not meant to be used for any public utility. But I think it's exciting to imagine a world where we can change that narrative, and that actually there are some fundamental features to Bitcoin where there can be yield that can also otherwise be accessed. And the differentiation here I would make for Bitcoin in particular is that Bitcoin yield is actually, real yield. In some sense, the whole construct of even how we think about fiat and the way T-bills pay interest coupon, the question of whether that being real or nominal versus inflation, these are complex questions about the definitional scope of what yield generation can be. But the beautiful thing about Bitcoin is because of its own design and the difficulty of unlocking real yield, there's a lot of value, even from a range of 1% to 5% that you could potentially earn on that asset. So in the end, I think the goal is pretty simple, is to think about bringing in a new lever of operating cash flow or intrinsic cash flow associated with the asset that isn't just determined by extrinsic financing or this perpetual machine that otherwise people speak to about what the roadmap has been laid out by our predecessors.
Thank you. And maybe Joe, on the same topic, just given Solana centricity.
Yeah, I guess for Solana company, between us, Some Capital, and Pantera, we talk about what DAT we should be sort of pushing for. This is the first DAT, so far the only DAT Pantera is sponsoring, and obviously the very first one for us as well. Bitcoin definitely, came across our mind, and also Ethereum. We started talking about this when Tom Lee was doing very well, and I guess the most important thing about a DAT is that you pick the right underlying asset, and that determines 80% or if not 90% of the value. And we looked at everything else. We thought Solana was the right one. I mean, it's highly performing, very scalable, cheap, and then it's got the highest, making the most money, the growth, everything. It just looked great. It's a very easily marketable story to not only Wall Street and investors around in New York, but globally, to any moms and pops and retail, family office, PE, sovereign funds globally. I think DAT, at the end of the day, after we get this thing done, we pick the right asset, and then our job is to advocate for it, to market, to tell the story globally, and then execute on capital markets, fundraising, especially at the right point in time. Right now is not the right time, right? Whatever you do right now is going to be difficult and sad, right? But the good thing about Ethereum, a good thing about Ethereum and also Solana is that it has yield. Even we can't raise capital, we have to have cash flow coming through. And Solana has, having 7% yield on natural staking, that's a great asset to own for the company. So we are feeling the pain of the share price, but we are not too worried about it, right? And then I guess treasury management is being run by Pantera, has done a great job. We just did our earnings call 2 days ago. We probably have the highest staking across all of the Solana DAT. But coming back to the whole DAT strategy, I think the most important thing in my mind, partly because of my background, I was running, investment banking business across 14 countries across the APAC, majority of emerging markets. And this is an emerging sector. And I was telling a lot of investors, especially in the past few months after I went back to Asia, after we get this whole transaction done in the US, it's like this is like China year 2000, when people, all the Western capital, foreign capital want to invest in China when China's opening up. And they don't know anything about China. There's no big four accounting, audit the financials, and rating agency are not quite into the whole China yet. There's a lot of not reliable research report from bulge brackets. What do? You pick to invest in PetroChina, China Telecom, simple things that people can understand to get your feet wet and then wait for things to evolve, get more information, third-party verification, more data before you invest deeper in the sector. And this is what's happening. And DAT's job is to do exactly that. At the moment we are taking Bitcoin, Ethereum, Solana, is hyperliquids, the rest. And I guess it will take another half a year to a year for people to go further into the sector. I'm looking at this whole thing is happening now, and people are talking about DAT 1.0, 2.0, different ways to talk about it. People have taking more risks to generate higher yield. I mean, that's what investors are looking for. But if you step back on a top down and look at the whole investor base who don't really understand our sector that well yet, by doing too much work to increase the yield by 1 or 2%, it doesn't really move a needle, right? We should be doing what we should be doing, educating the whole world, expanding the universe of investors, getting additional buying power into the sector. Throughout this sector, I think, throughout this whole down cycle, when there's not much you could do about capital markets, and I think we should be spending time facing, exploring different new markets and new pockets of demand, and for the sake of DATs and for the sake of the whole industry. That's my view.
Yeah, super helpful. I think you touched on a lot of important points there. Maybe just one of the last points you mentioned was just the access to capital, especially in tougher markets. Maybe as a segue there, do you think some paths for the teams that we speak to, they see consolidation in the space as a way to grow NAV, grow the treasury, while capital is not as available or effective? But maybe kind of open the floor. How do you guys view the consolidation that's, I think, inevitable in the space at some point in time as a core part of the strategy, or do you think it's just a result of some companies trading where they trade? Kind of open it to whoever would like to take that one.
I'll jump in on consolidation real quick. I think M&A is generally very difficult public to public. I mean, I think mathematically it looks like there should be some consolidation between various businesses in this space right now, but I think you have to look at the underlying business models of the companies and what they're doing. Does it make sense for them to merge? Just because they're trading at a large discount to NAV, what is the ethos of the business and what are they really thinking about? So, I mean, particularly on the Ethereum side of the equation, I think you've got people that are focused on just holding a lot of Ethereum and accumulating it. We're taking a very different tact. I mean, we're focused on actually generating free cash flow and owning assets, which I touched on before. But to execute on accretive M&A, you're going to have to get people together that do deals at a fixed exchange ratio so that there's not all kinds of arbitrage pressure on both of the stocks, and that have similar asset bases and similar mindsets about the business models that they want to execute on. And then I do think there are going to be some instances where it makes sense for this to happen. And now is an opportune time for it to go on. But I also think, and the prior panel said this, it's really important that companies are willing to actually monetize the assets that they have on their balance sheet to protect the NAV of their companies, which we've done. And if you're not willing to do that, then it's going to be really difficult to execute well on the M&A. So I think the two have to go hand in hand along with aligned business models.
That's one path, I think, to growth is that M&A mechanic, which we've seen Strive acquire Semler. There's been one instance of a more sizable transaction, but I think there is some expectation that will happen. It's just a matter of if and when. But agreed, it's not an easy thing to do, and maybe not the easiest path. Another path of growth that's been discussed a lot, and via the success of Metaplanet abroad. Maybe Jeff, to you, I know U.S. markets are kind of the priority right now. You guys are finalizing a transaction, but how do you think about scaling the operation potentially globally or accessing international pockets of capital here in the U.S.?
Yeah, I think one of the big misgivings or misconception about the DAT journey is a lot of people came to market thinking that the ability to trade at a premium to its book value would be the ends to a mean. But the reality is you actually have to earn the privilege to trade at a premium by bringing something valuable to the table, right? So I think that's kind of maybe the biggest misconception that has pervaded in the space. And to that point, I would agree that a large part of that ability comes from the ability to generate intrinsic cash flow or intrinsic asset level productivity, because that in itself gives you some return on capital on your balance sheet that then lets you model to the possibility of there being future cash flows associated with that, to which then you can, of course, as you all know in this room, apply some kind of discounted cash flow model to put a premium on the terminal value of that endeavor. So with that in mind, I think the incredible thing that is possible is if you realize Bitcoin at the core is a distribution channel for which people have a lot of interesting overlap to other qualities about different kinds of financial services or products they might be interested in the space, there's a genuine way to solve one of the biggest challenges of any public operating company or even any private company, which is that customer acquisition is extremely expensive. I mean, most SaaS businesses spend inordinate amount of money thinking about customer acquisition that eats into so much of their margin to add that incremental enterprise value multiple. The unique thing about being a digital asset treasury co is that you're actually the front-facing entity of a large distribution of investors who are interested in the thesis of that underlying asset. And there's certain characteristics and cohorts that come with that. It might be global. There may be more commonality between global Bitcoin owners than Americans themselves. But the point is that this is a cohort of investors that you can profile. And this is ultimately a bet on an executive team that's able to capitalize upon this and build meaningful operating products and services that can bring cash flow adjacent to the Bitcoin thesis that allows you to have this flywheel. This flywheel is essentially cash flow in which you're bringing in revenue that compounds to Bitcoin, with Bitcoin itself being a yield generator in itself that essentially helps you grow your balance sheet. If you can actually perfect this machine, which is in itself a fairly meticulous endeavor, I think that's kind of a new model that we have yet to see. And to your point, this is an emerging space. There's different prototypes of these that will come through. But I think with Bitcoin in particular, just because it's been around so long and there is a macro thesis associated with it as it touches independent investors and professional retail investors that I've had the privilege to get to experience, my partner has gotten the chance to experience through his podcast shows, Anthony Pompliano, those kinds of things, there's a certain amount of insight that can come from leveraging that towards something meaningful. in building.
Yeah, super helpful. I think the cash flow is continuously mentioned in all these answers, right? There's been a hyper focus on NAV and MNAV as a way to value the sector. In my own opinion, I think that will evolve. I think that's kind of a simplistic way to look at this, especially as you talk about businesses operating alongside this that will be cash flow generative outside of the digital asset itself. Maybe to you, Jamie, how do you think the sector evolves, maybe in the investor's lens or as the operator? Where do you think the KPIs and kind of the valuation metrics will start to be refined going forward? Maybe it's MNAV into perpetuity, but maybe it gets more cash flow multiples, et cetera. How do you think about value?
Yeah, no, I think it has to turn into something more sophisticated. I think MNAV really only works or makes sense if you're single asset, if you're more passive. For more complex businesses, for businesses that are looking to generate cash flows, to generate returns, to perform above the underlying assets, which ultimately is what we're here to do. That's what we're building for. We need a new set of metrics that honestly should be more traditional metrics. That's how we should be judged. I don't like the MNAV. I don't think it applies to our business.
Yep.
And I don't think it makes sense as far as measuring how an executive team is actually performing in running the business.
Sure. Yeah, I think it resonates well with the TradFi, larger pockets of capital, I think, that are used to valuing businesses on cash flows and EBITDA and growth, et cetera, versus just a NAV business model. And maybe to that point, we've had some pretty preeminent names involved in the space so far: BlackRock, Vanguard, kind of go across the entire asset management ecosystem, ARC. There's probably Fidelity. There's probably been 10 or so of those names that have deployed capital into this space, but there's obviously a large pockets of capital that have not done so yet. So maybe just Joe, I'll put it to you. How do we get those guys to convert into the space so that there's larger, kind of longer term pockets of capital that are supporting the ecosystem?
Well, as you can see just on the panel, a different strategy. Everyone look at the debt slightly differently. For us, it's very simple. We're building a institutional access to Solana ecosystem exposure, right? And I think we're sort of targeting the names you mentioned. Those are our key targets over a long term. But it's just that at the moment, the whole sector just started, with the exception of MicroStrategy and some of the Bitcoin DATs. Everything else just started in the last few months, less than a year. It's all very young, right? I think a lot of these big funds are still evaluating it. The only company that made some pretty good sized investments is probably BitMine, right? And that tells you one thing: you have to be a leader, and then you have to be big and liquid, right? Most of us are not quite there yet. I guess we just have to do what we have to do at the moment, like stick to our guns, execute on the strategy, and then in a way we have to sort of wait for this difficult time to go away, because this is not a problem for the DAT, it's a problem for the whole overall market, right? I think last night it improved because NVIDIA's result was good, but you can see that it's not going to go down forever. At some point, the liquidity is going to come back, money is going to come back to risk asset, and the share prices of DAT, some of the better governed, better run ones will perform, and then we'll continue to go again. I think it's critical, like any other listed company, that you get all these big players, like this big institution coming as your long-term shareholder base.
Sure.
Like, this is the only viable way to keep this sector being credible and healthy.
Sure. Maybe for you, Jeff, how do you think about the biggest risks right now? Right, the volatility is always, like I think mentioned. Maybe regulatory could have been pointed to 6 months ago, but obviously things have shifted a bit. What do you think is the biggest risk or headwind that you guys face in trying to scale the DAT as soon as possible?
Well, I think that we are largely de-risked by, first and foremost, having chosen Bitcoin as the reserve asset. Because I think there's actually more commonality for Bitcoin investors with the global macro community than I would imagine even with Bitcoin with the rest of the crypto ecosystem. Of course, there's an overlap and there is a shared construct there, but largely a lot of people choose to use Bitcoin as a proxy for a global macro trade in a way that is why it has such staying power. So in some sense, if you believe in the fundamental thesis of fiat debasement being a perpetual trend for which we're continuing to see more signs of stimulus across the world, China, now Japan, likely the US next year, then I think the Bitcoin thesis itself is the incredible privilege that we get to lean on. So then the question is, what can you do with that Bitcoin interim through its price action that can bring productivity levels today? And there's a spectrum of risk taking that is possible. Some of it could be leveraging the Bitcoin to actually acquiring operating businesses that are scalable in ways that we can solve for a particular synergy that can only be accessible through the distribution mechanism that exists within a DAT. I think that's a real potential proprietary advantage. But on the more kind of intrinsic side, Bitcoin, because it is collateral at the core, has properties in which you can generate yield that looks different than other crypto assets, in the sense that there is a way to participate in the financialized securitization market for Bitcoin that can achieve some kind of intrinsic yield associated with that. And I think even though 2% on Bitcoin feels like it would be a small number, if it's a Bitcoin denominated yield and you have a projection that Bitcoin is going to be a lot higher, let's say $1 million in 10 years, the 2% that you earn today in the forward value of what it could be on a Bitcoin denomination is actually a lot more material than earning 3.5% on cash. So that, I think, is the unlock that is necessary to continue to bring the ethos of this, access to alpha, access to kind of a diversified approach to Bitcoin plus investment vehicle as an entity.
Great.
I like how you snuck a Bitcoin price forecast in there, Jeff.
I think we started this by saying this year was largely, call it the year of DAT IPOs or DAT proliferation coming to market. Maybe a little bit broad-based of a question, but maybe for you, Jamie, in maybe 1 to 2 years' time, what do you think is going to happen here? Do you think we're going to continue to see the IPO of DATs? Will there be, just the number continue to scale? Do you think there's going to be just a select few that can, really take scale and survive? How do you think about it?
How many banks are in the United States? 4,000. I think as we have illustrated as a panel, not all DATs are created equal. In fact, there's a variety of differences between us. There's investors want choice. They're going to look at DATs as an option within their portfolio. They're looking for different kinds of things, and I think this is as an asset class, I don't know what we want to call it. I think it's here to stay. I think it is just the beginning. I think it will evolve, of course, but I don't think it's going away, and I think it will continue to grow.
And maybe to you, Mac, do you think it scales globally as much as it has scaled in the U.S. over the past year, or do you think it's more of a U.S.-centric story? How do you think about that?
I mean, I think Ethereum is a global story, and I think, interestingly enough, like what scales Ethereum the most and what makes the price of Ethereum or ETH go up the most is all the things that we're doing on L2. If we bring hundreds of billions of dollars of assets onto L2s, onto exchanges, it's going to drive the price of ETH up. And that's the reason why I think you need to hold some Ethereum. It's not for any other reason. It's everything else that's going on in the real world associated with Ethereum. And that's what excites us about having it as a balance sheet asset. It's an asymmetric option to the upside over a long period of time.
Oh, there's definitely a much deeper, better understanding of Ethereum across Asia. I think Mac is his job sort of, carve up for him. All you have to do is show up. People understand. He doesn't have to explain what it is. I think to expand, I think ETH, DAT globally is easier, but I guess for Solana it's harder, but it obviously has more potential.
Okay, I think we can add time now. I want to thank you four.
Thanks, Colin.
Thought leaders in the space, I think super intelligent. They're driving things forward here. Thank you for your time.
Thanks, Colin.
Thanks a lot.
Thanks for having us.
Thank you.
Thanks, Colin.
Yep.